These are the physics-based sentiment forecasts for the U.S. stock market using data as of March 28, 2025. Our report has three figures, and this video focuses on figures 1 and 3. See the videos and web pages linked on each page of the report for background information on the figures. Our 3-week forecasts call for long-term physics-based sentiment to be rated of 4, meaning most optimistic. Short-term physics-based sentiment to be shifting to optimistic the week ending April 11th. There are no major flashes of sentiment within this forecast horizon. Regarding minor flashes, we expect them to be varied over the forecast horizon. Our forecast for U.S. stock market price momentum, as measured by the 14-week RSI, is for it to be higher than slightly lower week ending April 18th. Implied economics-based sentiment registers as meaningfully negative, which indicates that investors have a negative view of economic and market conditions. In summary, recent stock market price declines occurred during the expected multi-week period of naturally occurring pessimism. Actual declines in price momentum were greater than the predicted reduction in price momentum, which is consistent with the meaningfully negative implied economics-based sentiment readings of recent weeks. Going forward, we expect greater investor optimism. Long-term naturally occurring sentiment will become more optimistic over the forecast horizon. Short-term sentiment will also be optimistic by the end of the forecast horizon. However, investors continue to have a meaningfully negative view of economics-based sentiment, and this condition will likely dampen any price rebounds and magnify price declines. At this time, the macro and micro MRI suggest that the meaningfully negative economics-based sentiment is not sufficiently negative to suggest major losses, i.e., losses more than 30%. The lower panel of Figure 1 shows the physics-based sentiment drivers, indicating the naturally occurring shifts in investor sentiment over the last 52 weeks and the next 3 weeks. Physics-based drivers explain a large portion of stock market volatility, and we can create reliable forecasts for them several months in advance. The long-term driver shifts to most optimistic the week ending March 28th. The short-term driver shifts to an optimistic stance the week ending April 11th. There is a minor flash of pessimism ending the week ending April 11th. The upper panel displays the price of an ETF tracking the S&P 500 equal-weighted index, shown as a dark blue line, along with our market resilience indexes, or MRI. The MRI are based on return acceleration and show the herding behavior of investors as they respond to physics-induced sentiment shifts and all other economic and market factors. They highlight major and minor market inflection points. The macro MRI is relatively high in its range, a level of 66 on a 0 to 100 scale, and has been at or near this level for several weeks. This indicates that the market does not currently have a strong positive or negative long-term trend. The micro MRI is in the downleg of its cycle at a moderate level of 44 on a 0 to 100 scale and has been at or near this level for several weeks. This indicates that the market does not currently have a strong positive or negative short-term trend. The exceptional macro MRI is not present. In Figure 3, the upper portion of the figure shows market price as a dark blue line and the predicted price momentum as the solid red line. The solid red line shows the predicted price momentum moving higher through April 11th and the moving slightly lower. Figure 3 also shows the smoothed excess VA-RSI as the light green line representing the implied economics-based sentiment. This is an important indicator of investor sentiment regarding factors other than physics-induced optimism and pessimism. The factors can include economic, valuation, political, and other considerations. A meaningfully negative reading highlights the potential for future market declines even when the market moves higher. A meaningfully positive reading can mitigate future losses. Our implied economics-based sentiment measure is below the neutral level, shown as the dashed green line, indicating meaningfully negative sentiment related to real economic and market factors. This condition began at the end of January 2025 and is likely to continue over the next few weeks, even if the stock market moves higher. Should this condition continue, it will amplify price declines and dampen price recoveries. Contact me with any questions. Thank you for watching.